Stephen, what did you make of these third quarter results out of AngloGold?
I think this was an excellent quarter, guiding on production and on cost exceeded that. To nail a bit on swing about on the tax rate, but a very solid quarter. Cost control very well controlled. Actually, in South African operations, the cost went actually down, and that is against wage increases and winter income tariffs. So it was really a surprise to the upside, and I think the market's been pleased by this.
Stephen, it was quite interesting for me looking at the results, and besides the final removal of the hedge book, which has been a legacy issue over the years, was looking at their cash costs across the regions. And if one goes to North and South America, the average cash cost across that region is about $430 compared to the business as a whole of about $630. Would you see increasingly that they move out of Africa into North and South America, specifically for their mining, where probably it's automated and hence the massive reduction in costs?
No, I think in South Africa specifically, there is keeping a base load of say 1.7, 1.8 million ounces. But there is an organic growth in continental Africa. We're going to see, especially from Mubasi, maybe production can increase there by another 200,000 ounces at least. Growth in Cerro Vanguardia in Argentina, that's on the card. And obviously the new project in Australia, Tropicana, that will add close to 500,000 ounces. So growth is all over most of the continents, but in South Africa specific, there is going to be a strong baseload, and we don't see any decrease in production even from South Africa.
AngloGold Ashanti today closing at 357 Rand, up 2%. What do you make of share price at current levels?
Well, I'm surprised that the share price didn't act more positive to these results. I think, as I said before, the company is fairly priced to the cheaper side. I think it's probably in the environment we are for a South African investor. It's a low risk investment. The cash flow is going to be very strong going forward without the hedge book. Without that hedge book, you look at about the extra $600 million per annum gold price received on top of the hedge book out of it now. So very strong cash flow, very good management. The activity is coming through on a price to NPV basis. It looks a very attractive forward P about 12. I think it must be the preferred gold stock in South Africa.
So a big thumbs up there to AngloGold Ashanti. Thank you very much. Stephen Willifser, gold analyst at Metropolitan Asset Management. Simon, what are you doing in the market at the moment? We've got, in terms of the general broader JSE all share, pushing higher. It looks as though we're going to test 33,000 and probably do that by the end of the year. We know the argument, it's being driven by liquidity and by foreigners searching for yield and people not knowing what to do with their cash effectively. Your thoughts at this stage, and what action you're taking in the current environment?
Yeah, I think most investors sit pretty much in the same sort of dilemma at the moment, that markets have appreciated quite sharply over the last kind of 2 to 3 months. I think if we go back to August intra-month, the market was down about 15%. Subsequently, it's rallied quite strongly. But in terms of what we're doing, it's all about the relative returns we can earn from other asset classes, and the case remains the same there, that relative to other asset classes, equities still stand head and shoulders above the rest. So we will continue to be invested in equities.
Are you one of those who advocate that the kicker for the JSE all share is going to come from the resource stocks, the likes of the BHP Billetins, the Anglo Americans, that have to this point underperformed the industrials and financials?
Yeah, absolutely, and I think that'll be that'll manifest next year when we see significant earning increases from the likes of both Anglo American and Billiton. Both are likely to have earnings increases in the order of 40 to 50% based on increased demand and increased underlying spot prices, particularly in the case of Billiton for iron ore and coal.
Do you like the fact that Billiton is now having trouble with the Canadian government in terms of getting this potash deal to come to fruition? Would you rather see them walk away?
I think, rather than dilute shareholder value through overpaying, it is always better to walk away. And I think the opposite side of the coin if they don't do an acquisition is what do they do to do with their cash pile?
Give money back to shareholders. Is that what you want?
Exactly. And we saw another announcement from Citigroup this morning saying that Rio Tinto will be cash positive in 2011, and they're expecting $10 billion worth of share buybacks from Rio Tinto, or possibly 10 billion from Rio Tinto. So I think that'll be a trend in the resource sector, and that'll continue to support those share prices.
Is there anything on the top 40 that you would not take profits on because it has run so hard, because it has given you such a significant return?
Yeah, I still think given the low interest rate environment we're in at the moment and we're likely to see over the next 12 to 18 months, I think it would be foolhardy to move out of equities at this stage. We'd probably be doing that either on any pullbacks. We would be adding to positions.
Have you got significant cash on hand, or are you pretty much fully invested in equities?
Yeah, we're pretty much fully invested at the moment.